Have you ever felt like your trading strategies are missing that extra edge? What if you could combine the strength of three powerful indicators into one super effective tool? In this video, I'm going to introduce you to the Pulse Oscillator by UAlgo, a game-changing indicator that brings together the RSI, CCI, and the stochastic oscillator into one cohesive system. If you find this video helpful, don't forget to hit that like button. That would be really appreciated. Let's dive in. To start using this strategy, the first step is adding the Pulse Oscillator to the chart. To do that, head over to the Trading View. That's the trading platform I'll be using. If you haven't signed up yet, there's a link in the video description to get started. Once everything is set up, open the Indicator Search tab and type in Pulse Oscillator. Make sure to select the one by UAlgo. So what makes the Pulse Oscillator special? This indicator is designed to capture market momentum and detect trend changes by combining three well-known technical indicators: the Relative Strength Index or RSI, the Commodity Channel Index or CCI, and the Stochastic Oscillator. By integrating these, the Pulse Oscillator offers a complete view of market conditions, reducing the weaknesses of individual indicators and making trading signals more reliable. This multi-indicator approach helps filter out noise and false signals that you might encounter when relying on a single indicator. The CCI focuses on identifying cycle trends in asset, while the stochastic oscillator compares a specific closing price to a range of its previous price over a set period. By merging these tools, the Pulse Oscillator creates a weighted momentum oscillator that can adapt to different market conditions. Looking at its structure, at the top of the oscillator, you'll see an overbought level, and at the bottom, an oversold level. These levels help identify potential reversal areas in the market. The main component of this indicator is the trend ribbon, which appears in the middle. It consists of two lines, a fast line and a slow line. These lines generate buy and sell signals. A buy signal happens when the fast line crosses above the slow line, indicated by a blue dot on the ribbon. Conversely, a red dot signals a sell when the fast line crosses below the slow line. Additionally, the ribbon changes color to indicate the market's overall trend. A green ribbon signals a bullish trend, while a gray ribbon indicates a bearish trend. This visual design makes it much easier to quickly interpret market conditions. Diving into the settings, you'll notice several customization options. The most important one allows adjustments to the individual weighted of the RSI, CCI, and stochastic oscillator. You can tweak these settings to emphasize one indicator over the others, depending on your trading strategy. There are also options to modify the periods, smoothing techniques, and levels to fine-tune the indicator to fit your trading style. For example, increasing the RSI period can provide a longer-term view, or adjusting the smoothing method can help filter out more noise. However, for the purpose of this video, I'll be keeping all the settings at their default values to keep things simple. Now let's see how the Pulse indicator can be used as a standalone tool. But before that, I want to introduce you to my trading family at Bybit.
Welcome aboard our crypto arc where dreams meet freedom. Join us on this journey as we empower crypto believers with knowledge and tools to achieve their goals. And guess what? We're just getting started in this world of endless possibilities. Click the link below to join us now. Enjoy zero fees on spot trading for the first 30 days and a chance to win up to 30,000 USDT in deposit rewards. Join Bybit today and ride the wave of crypto success.
All right, back to our trading strategy. It provides a clear buy and sell signals based on the crossovers of the fast and slow lines, along with the color changes in the ribbon. Here's an example of a long trade. Suppose you're monitoring Aussie against Canadian dollars on the 1-hour time frame. You notice the fast line crosses above the slow line and a blue dot appears. At the same time, the ribbon turns green, signaling a bullish trend. On top of that, the indicator is emerging from an oversold area, further confirming the signal. In this case, you could consider entering a long position. Your stop loss would be placed below the most recent selling low, and your take profit could be set at a previous resistance level. Or you might use a risk to reward ratio of 1.5 to 1. While the pulse oscillator is already quite effective on its own, adding an extra confirmation indicator can enhance its accuracy. To do this, let's add this market beacon to the chart. This combination helps create a more robust trading strategy. Once it's added, double-click on it to access the settings. In the Inputs tab, disable the following options: Buy Label, Sell Label, Buy-Sell Plot, Candle Boxes, Labels, Indicator Fails, and Lines. After that, click OK. This market beacon is a powerful tool that provides additional buy and sell signals. By adjusting its settings, we streamline it to show only the key information needed. This indicator prints long and short signals directly on the chart, making it easier to identify potential trend reversals or continuations. When combined with pulse oscillator, it significantly increases trade accuracy. So how do we take long and short positions using these two indicators together? Here's an example of a long trade. First, look for a buy signal on the pulse oscillator, a blue dot where the fast line crosses above the slow line. Once you spot it, mark it with a vertical line for reference. Next, check for a short signal to the left of this vertical line. You want to make sure there was a previous short signal from the market beacon indicator before the buy signal. Then, confirm a long signal to the right. Look to the right of the vertical line and see if a long signal appears from the market beacon. Lastly, confirm the bullish trend by drawing a trend line to ensure the market is trending upwards. If all of these conditions are met, you have a valid setup. Enter a long position, place your stop loss just below the most recent swing low, and set your take profit at 1.5 times the risk. As the trade progresses, you'll see it moving in your favor, eventually hitting take profit, making it a successful trade. It's important to follow this exact sequence: a buy signal from a pulse oscillator, preceded by a short signal from the market beacon, and followed by a long signal. Any other arrangement should be considered invalid. For a short position, the process is the opposite. Look for a sell signal on the pulse oscillator, a red dot where the fast line crosses below the slow line. Mark the signal with a vertical line, then check for a long signal to the left and confirm the market beacon printed a long signal before the sell signal. Next, verify a short signal to the right of the vertical line. Finally, confirm the bearish trend by drawing a trend line to ensure the market is trending downwards. Once all these conditions are in place, you have a valid trade. Enter a short position, place your stop loss above the most recent swing high, and set your take profit at 1.5 times the risk. Let the trade run, and it should turn out profitable. Now, keep in mind that market beacon is a private indicator. I'm featuring it in this video because I think it pairs exceptionally well with the pulse indicator. If you're interested in using it, click the link in the video description. It will take you to a page where you can try it risk-free for 7 days. And if you find it as valuable as I did, you can purchase it for a long-term use. Plus, using the link in the description gives you a 20% discount, so be sure to take advantage of that offer. That's it for this video. I really hope you found this helpful. If you did, hit the like button and consider subscribing to stay updated. Thanks for watching, and I'll see you next time.